We are excited to share with you more information about the launch of Compass Private Wealth, your trusted independent financial advisors. In this presentation, we'll give you more detail about our new investment approach and what it means for you, the individuals we are privileged to call clients. What started as a one-man shop 20 years ago is today a team that is honored to manage over $140 million in assets for more than 230 families. Though we've grown substantially since our humble beginnings, our vision and mission remain the same. For us at Compass Private Wealth, we have one focus, the reason we come to work every day, and that's to have a positive impact in our clients' lives. To do this, we stick to a guiding vision. We work to help create financial capacity for our clients so they can in turn have the impact they want on their family and community. It's important to think about financial capacity in a broad way. From the presentation today, you'll learn more about the scope of our services. It is worth remembering, it's not all about the money, because wealth means nothing if there's no meaning attached to it. With core values in mind, the team at Compass Private Wealth looks at the bigger picture. We know that a well-rounded wealth manager will consider more than just investment and asset allocation. That's why we offer services and experience in retirement planning, estate planning, tax planning, and insurance. In the coming weeks, Compass Private Wealth will transition services from the standard Raymond James platform to Raymond James Correspondent Services. What does this mean for you? First and foremost, it allows us the flexibility to better control costs while having access to additional investment options for our clients. Raymond James will continue to be the custodian for your assets, giving you the confidence your hard-earned investments are safely held. Your statements and online logins with Raymond James will remain the same. As well, your assets will remain protected under the Canadian Investor Protection Fund. Additionally, we will now be licensed by the Ontario Securities Commission as a portfolio manager. This brings our firm under more stringent regulations. We will be held to a high standard of professionalism and service, including detailed compliance, protocols, and audits. As mentioned, this transition provides new investments. Over the next few minutes, we would like to describe the opportunities ahead in alternative and other asset classes. Compass Private Wealth has thoroughly examined and evaluated the current investing landscape. Through this work, we recognize our investment approach can evolve and should provide less volatility and better returns for clients. This is a picture of a traditional investment portfolio, known as a 60-40 portfolio. It is invested 60% in equity, such as stocks and equity mutual funds, and the 40% in fixed income, like bonds and GICs. This mix was, and in many instances continues to be, the industry standard. However, this industry standard is facing headwinds. Numerous studies have shown that the 60-40 portfolio is producing poorer returns, while facing more volatility. Simply put, your hard-earned assets would not work as effectively in this type of portfolio, or you would be accepting higher risk for a lower return. Studies anticipate volatility to stay high over the coming decade, producing continued struggles for the traditional model. We've seen this challenge highlighted recently. 2018 was a rough year across all major asset classes. To summarize, this chart shows the declines in stock markets and bond markets over the course of the past year. Though the traditional 60-40 portfolio has seen headwinds, there are alternative approaches in which Compass Private Wealth sees opportunity. Being faced with lower returns and higher volatility, pension plans, foundation and endowment funds across North America and around the world have been using a broad range of diversified investment that generates stable cash flow with less volatility than traditional portfolios. Based on principles outlined by David Swenson, the Chief Investment Officer at Yale University, as well as the models and practices utilized by funds such as the Canadian Pension Plan, the Alberta Investment Management Corporation, and Norway's Sovereign Wealth Fund, we have developed a pension-style investment approach. Many of our clients don't have pension plans to invest their retirement savings in or draw income from. Accordingly, we have developed an investment approach with broad asset allocation, which would be based on the same successful principles as those of major investors such as Yale or CPP. The pension-style model shifts the asset mix, reducing both the stock and fixed income allocation, and instead invests more in alternative assets. This chart shows an example of allocations within a pension plan like CPP. Pension funds in Canada have shifted heavily to alternative assets over the last decade and a half. On average, they now hold nearly 40% of their portfolios in these types of assets, where in the past, they held 10%. The reason for this shift is stocks are expected to be more volatile with less return. Fixed income is expected to struggle as interest rates rise. By increasing the amount of alternative assets, portfolio returns should be higher and more stable. Alternative assets include many types of investments. For example, the Canadian Pension Plan has real estate, infrastructure like airports and docks, as well as private debt and private equity. Let's dig into each of these categories. Real estate is ownership of property where income is generated through rent, and growth is generated through appreciation and improvements of the property. Infrastructure is owning assets like toll roads, hospitals, communication networks, and airports. Private debt is lending money to property developers or businesses. And private equity is ownership in private companies, not listed on stock exchanges, with strategic ways to grow and increase earnings. With our current traditional advisor-broker structure, these types of investments are not readily available, so clients wouldn't be able to invest in these on their own. Because of minimum investment amounts, it would take millions of dollars to invest in these types of assets on your own. They tend to be very exclusive and hard to access. Even though we have been able to use a few of these types of assets in the past, our firm, with its transition to Raymond James Correspondent Services, and by working to develop key investment relationships with fund managers and companies, we have many more of these opportunities available to our clients. As you may be aware, Compass Private Wealth has been at work in the alternative asset space for a number of years. An example of this is First Source Mortgage Corporation. First Source is a boutique private lender of small and mid-sized commercial and development mortgages focused in the Greater Toronto Area and within the Golden Horseshoe. First Source has built an impeccable reputation as a dependable and astute lender, managing risk through conservative underwriting and diligent mortgage servicing. And it is not a fund most investors could purchase on their own. A few years ago, recognizing the need to provide portfolio diversity for our clients, we negotiated with First Source, which allows you access to the fund. As you can see in this chart, this fund, noted by the blue lines, has provided consistent and stable returns for clients. Compared to the Toronto Stock Exchange or a short-term bond index, First Source has outperformed. If you held the fund for at least 3 years, you would have seen a return of 26%. Over the last 10 years, the annual returns have averaged 8 to 10% consistently. Though alternative assets can sometimes be less liquid, meaning harder to buy or sell, the use of pooled funds, which we'll describe later, helps to eliminate this issue for our clients. So why are the alternatives so important? As shown in the previous slides, the traditional 60/40 portfolio is not as effective as it once was. Interest rates are low, stock markets are volatile, and returns are lower. But alternative assets provide an opportunity, much like a toll road. Not everyone can access them, but they are diversified and in many cases not correlated with the stock market, meaning when the market is going down, they could be going up. While everyone is on the freeway stuck in traffic, we have the opportunity to take the toll road, a different route, and by having scale, use some of these alternative assets in a way that can benefit all clients. Now that you understand the value of alternative assets, we will explain how Compass Private Wealth can help you invest in these opportunities. In the coming months, we will talk to you about our newest portfolio management solution, Northfront Pooled Funds. These pooled funds will provide access for clients to alternative asset products like First Source. It's important to understand that the pooled funds are not a regular mutual fund product. You can't compare them apples to apples. The Northfront pooled funds are unique, exclusive investment products which will give you the opportunity to invest in alternative assets like real estate and private business. Products you couldn't invest in otherwise. We want to ensure all of our clients have the opportunity to invest in some of the best assets available. To illustrate what portfolios could look like with Northfront pooled funds, here is an example of a growth income portfolio. This portfolio would hold 30% of its assets in fixed income, such as cash and bonds. 30% would be in equity stock investments, such as public shares in dividend-paying companies. And 40% would be in alternative assets, such as private equity, private bonds, and real estate. This sample doesn't cover all the options. As with our clients, we will work to tailor the right portfolio for you based on your needs, risk tolerance, and overall goals. We will work with you to ensure you have the right mix for your situation. Though we'll be providing you with much more diverse investment portfolio, including exclusive investment opportunities in alternative assets, your statements will be simpler. You will go from having multi-line statements with numerous holdings to shorter statements. There would be some exceptions for those holding restricted assets. We are excited by the changes underway at Compass Private Wealth. As you've seen in the presentation, we will be able to provide better, more exclusive investment opportunities for you. To make these changes a reality, there's a little more work ahead. However, we have been proactive to ensure there is minimal disruption to our clients. While we are excited about these new investment opportunities, we realize that some of you are pleased with your current investments and have no plans currently of changing. That's understandable. Be assured that we will continue to provide you with the same service and advice we always have. For you, nothing will change other than the required paperwork to be signed. First, because we are transitioning between divisions at Raymond James, account numbers and other identification information remains the same. Your investments will be transitioned without issue, and Raymond James will continue to be the custodian of your assets, holding them in safekeeping. The one area where we need your help to complete this transition is signatures. We will sign the paperwork with you when we see you in the fall. If for some reason we are unable to complete it then, one of our team members will contact you to find a convenient time for you to sign a few forms. Once we have completed the necessary paperwork and finalized the transition with Raymond James, we will meet with you to discuss the custom designed pools, funds, and opportunities for allocation in your portfolio. We hope you've enjoyed this presentation. We recognize it provides a broad overview, but you will receive more detailed information over the next few months. In the meantime, if you have any questions, please don't hesitate to contact the office. We are happy to discuss the opportunities ahead. Thank you for your time and your trust. We look forward to continuing to work with you and help you achieve all that is important to you.